Welcome to The Growth Show with Matt Lindsay, where we discuss growth strategies both for business and a personal perspective, discussing all kinds of businesses, growth strategies, technology, investment strategy, and much more. We are meeting with entrepreneurs, investors, app developers, and property developers. Our vision is to help 10,000 business owners grow their businesses. Introducing our host, Matt Lindsay. Matt is a former banker and corporate financier. He now spends his time building his own companies organically and through acquisition, as well as raising capital for other businesses. Matt works with a wide variety of entrepreneurs and investors.
Good morning and welcome to The Growth Show with Matt Lindsay. Today my guest is a person I've known for a number of years, probably about 14, 15 years. I was thinking about it the other day. My guest today is none other than Mr. Jeremy Harbour. Welcome, Jeremy.
Hi, thank you.
Good. Well, thank you for joining me. And I was thinking back over... I seem to remember many years ago we went out in Watford for a few beers when you still lived in the UK, and we were talking about some of the things that you were up to then.
Yeah, that does really date it, doesn't it? Because I'm just trying to think. I mean, the last place I lived in the UK was Marlow,
Right.
and I left the UK probably 12 years ago.
Right.
So it must have been 15 years ago or so if I was still in Watford. Yeah. So yeah, that's making me feel old.
me too. Yeah, and clearly we've kept in touch, and we had one company set up at one point where we were looking to do some stuff with one of your is it mentees or one of your students, I should say. But yeah, we didn't quite get there in terms of transactions then. But yeah, I guess I've from a personal perspective, I've kept a beady eye on what you've been up to, and clearly your kind of strategy of business acquisitions and the training business seem to both have evolved since we were talking. But for those of my listeners who don't know who you are and what you do, if you could provide a bit of narrative in terms of your background and how you got into buying and acquiring and agglomerating companies, if that's a word, that would be really useful.
Yeah, no, you got it right first time. So yeah, look, most people I think I do mergers and acquisitions, but most people come at mergers and acquisitions from the kind of corporate advisory space. So they come in through investment banking, corporate finance, or legal or financial backgrounds. I came into it from an entrepreneurial background. So at a very young age, I was doing startups. My first proper company, I was about 13 years old. I left school when I was 15 to pursue that. So I didn't actually completely finish school. I did my last GCSE and left, basically. I didn't go back for any of the... I certainly didn't go back for any of the detentions I had left over when I finished up. I thought, well, what are they going to do? They're going to give me another detention, aren't they, if I don't go? So what's the worst that can happen? So I went off to pursue that business. That business went bust when I was 18, which was probably quite useful to me at that time because it taught me some humility. When you start in business and things are going your way, you feel like you're invincible and everything you touch turns to gold, and you quickly realize you know absolutely nothing, and it's much harder than it looks on the outside. So that was good. That taught me a lot of valuable lessons. I got into the telecom sector when that was really hot, and that was, I guess, my first introduction to the idea that you could buy a company instead of building one, because up until that point, I think everything I'd looked at and studied, and the seminars, the books, all of that kind of stuff was all around sales, marketing, leadership, building a great culture and a team and all that sort of stuff. And then all of a sudden there were these guys trying to buy my little telecoms business. And the interesting thing was the deal structures didn't involve a lot of their own cash. And so I kind of started thinking, well, I don't have a lot of cash either. Maybe I should be on the other side of this table and I should be the one trying to buy another telecoms company. And so I pivoted the way I communicated with people, because I think up until that point, whilst I was the CEO and I'd built £1 million a year business, I was really just a glorified salesperson. I don't think there was hardly a customer in the building that I hadn't bought in there, you know, and so really I was a glorified salesperson. And then when I pivoted and went out and started looking to acquire companies, I just got in way more interesting conversations. I started getting, you know, I did a massive joint venture with Costco, which was, you know, more than double the size of the company on its own. I just found that not being a hunter opened so many other doors up to me. But anyway, to go back to the kind of the origin story, if you like, I ended up finding a little distressed mobile phone company down the road from me in Slough. And I was able to acquire it without using any cash. And it was lucky because I didn't have any cash. I had a choice of paying my credit card bill or my staff. I didn't have this other other option. But I did this deal, and we basically grew by a year's worth of sales in an afternoon. And it was an epiphany. It was like somebody, you know, opened the curtain, and I looked behind the curtain, and there was this whole other world there that I just didn't know was there the whole time. And in fact, 2 weeks after the ink dried on that contract, I bought an IT company as well, also with no money down. So it was kind of like a cork had popped, you know, and I was, it became kind of unstoppable. So wow. Basically, since then, I've just been fascinated with the idea of buying and selling companies instead of building them. And I just felt it was like another rung on the entrepreneurial ladder that a lot of entrepreneurs never really explore, because they get lost in that nitty-gritty day-to-day staff and customers kind of stuff, that they don't pop their head above the parapet and look at the more strategic things they could be doing in their business, like, you know, creating joint ventures which add huge amounts of value, doing mergers which can, you know, get you amazing talent into the business or grow the business much more quickly, or acquisitions which can be, you know, game-changing in terms of the scale that they can add to your business, or exits which can be game-changing for your own personal wealth, which I guess was my next epiphany. I built a group of companies. We got up to, well, we went from $1 million a year in revenue and 20 staff to 135 staff and 13.5 million in revenue in about 18 months flat. And that wow. That was probably around the time we went for that beer in bodegas in Watford. It was sort of that time in my career. And then in 2006, I sold one, and it was the capital event from selling a business that basically gave me my next epiphany, which is that you don't make money running businesses, you make money when you sell them, and it de-risks the whole situation. I also had businesses go bankrupt around that time. One was a call center business that had a very large exposure to the insurance company AIG. And right. AIG went obviously bankrupt in 2008, and we got caught with the fallout from that. And that business I had to close down, and that was a real cash cow for me. That was one that, you know, I relied on for a lot of cash flow. So all of these things kind of conflated to make me realize that you need to, you know, create these capital events in order to build wealth, and that, you know, it's better to kind of almost buy and sell companies often rather than focus on one big, you know, giant dream that you hope to sell in 20 years for 100 million or something like that. And so sure. Basically over the last, you know, couple of decades, I've just been buying and selling companies relentlessly. I've done over 100 transactions in the kind of SME space, so small wow. businesses. I've done a couple of IPOs. I've done lots of RTOs, or reverse mergers, where you take companies public by pushing private companies into public companies and receiving public stock in exchange. Sure. And as you mentioned, the agglomeration model. And the agglomeration model was really an observation about what was going on in the marketplace, and that is that, you know, 50% of GDP in every major economy. So I mean, we operate in the US, Canada, the UK, Singapore, Australia, and New Zealand mainly. We do stuff in other places as well, but they're the main markets that we operate in. And in all of those countries, 50% of GDP comes from small business. Over 90% of the private sector workforce is in small business, and yet small business gets zero allocation as an asset class from asset managers, fund managers, and all those things. If you look at the top 500 asset managers in the world, they control $93 trillion of investment, and they have this huge pie chart of how well diversified they are, and they're in every asset class imaginable to, you know, known to man. They're in all these investments, plus precious commodities, and you know, Bitcoin, real estate, and stocks and bonds, and all these kind of things. But zero of it goes into the real economy, that 50% of the economy that's small business. And I just felt if we could reconnect that capital to small business. It was $1 trillion opportunity for me, but also it's $1 trillion opportunity for the world at large, because it would bring all of that money that's kind of almost rotting in hot, sandy places, and it would bring it back into the real economy. It would get it out of Wall Street and into Main Street, where people can actually do something useful with it in all the communities that people operate in. So we had a crack at it in 2016. It didn't go to plan, but we kind of licked our wounds, rebuilt the model, and went again in 2018. We listed MBH Corporation Plc in 2018. Okay. 2019, it was the fastest growing small cap company in Europe, and now it has 23 small business subsidiaries underneath it. So it's like a mini Berkshire Hathaway. It's a diversified investment holding group of small businesses. We're adding companies on a really regular basis into that agglomeration. And we call the model agglomeration because it's unlike a traditional roll-up in that the business owners themselves effectively get the benefits of going public without all of the other sort of pain in the arse points. So they get to continue running their business as they had before. They get the benefit of a big balance sheet, a big P&L of a multinational public company. So they go pitch for bigger contracts and attract better talent and all those things. That's kind of keeping me pretty busy.
Wow, what a story, and what an introduction. So in terms of the I guess you kind of have two kind of core sides of what you spend your time on, and I'm sure you'll correct me if that's wrong, but I see it as, you're actively acquiring these businesses, and then you kind of have the training side where you're teaching other people how to kind of adapt and use that model as well. How did that side come?
So back in 2009, I started to get a bit of a reputation for, before that, I started to get a bit of a reputation for doing these deals. I mean, particularly I would buy companies in other people's sectors for £1, for nothing, for no money down. And the competitors would want to know how I did it. And more often than not, actually, what they wanted was they wanted me to come on board as some sort of consultant or non-exec. So I would get all these offers all the time: come and work for us. We saw you bought XYZ company, come and work for us and help us grow our business by acquiring these businesses. And I just used to look at these offers and think, well, where the fuck could I do that? Pardon the French, but it's like, why would I take a salary to acquire a company that I'd found where I could just buy it myself, and sell it myself? They had nothing that I needed, and so I guess they were pitching, that they needed to focus on how they pitch someone. But anyway, I ended up buying a seminar company, and that was when the penny dropped. Was hang on, I've got all these people, because I was getting like an inquiry every few weeks from somebody saying, come and work for us. And I bought this seminar company, and I just realized that's what I do with the inquiries. I'll just teach them how to do it. I charge them a fee. I'm not jealous if they then go off and do it on their own, because I'm like a proud father in terms of I've taught them how to do this and now they're doing it. I can be proud of them. It's not like working with someone who steals all your ideas and goes off and does it. Why don't I teach it? And so I started teaching it in 2009. I called it the Harbour Club. I used to charge the first time I did it, I charged 35 grand for it. It was 45 grand 6 months later, because I was price testing it. And then I realized in 2009, I did 12 deals, and 12 of them came from joint ventures with people in the Harbour Club. I got so busy doing deals with my own community that I was creating, that I'd almost stopped doing my own running around and meeting people and stuff like that. And so after that, basically what I decided to do was to drop the price, make it a more simple course, because we used to fly off in a private jet to somewhere glamorous. The first one was in Saint-Tropez. We then did all these monthly meetings at 5-star hotel out in the countryside in the UK and all this sort of stuff. So we basically got rid of all the fluff and just focused on the core education. And then over the years, what we've done is build a community side to it. So we now have like an app where everybody's in there. We've expanded into the US and into Australia, so we've got the whole world pretty much covered, the whole English-speaking world covered. And the community is incredibly active and vibrant now. I was saying to somebody the other day, there is now more content being posted in the app that's not by me than there is by me. So there's all these videos going in all the time around sourcing, around doing deals, around specifics in different countries, hacks for Australia or hacks for Canada or, whatever it is. So all this extra content is going in without me participating in that, and also the people doing deals. I mean, like somebody today on WhatsApp said they just sold a company, and I was like, shit, I didn't know you'd bought one. It was it was the first I'd heard of it. And another person was saying, I've done my fourth deal, and I was like, again, I didn't know about deals 1, 2, and 3. So the community's really taken on a life of its own, and they're out there really sort of hustling. So it's really fantastic. We built it on a kind of an anti-seminar basis, because the thing I hated was the traditional seminar model where it's all hard sell. There's not, you don't really get the information you want because they want to sell you the next thing all the time. So we did this deliberate approach, which was to say, look, there's one fee, it's lifetime membership, and basically there's no upsells, there's no cross sells, there's no mentoring, masterminding, any of that shit. All of that stuff is included and free within the structure. So we're a bit more expensive on the front end, but that's because we're not going to try and sell you something afterwards. It's done,
Sure.
And we're the only one, I think, that's actually based on real experience. Most of the others are selling regurgitated information that they've read rather than personal experience of hard won experience in the trenches.
Sure.
So it really is quite a unique little thing. But yeah, I'm really lucky. I have a great team on the Harbour Club, so I do very, very little. I pretty much answer their questions, turn up and speak, we do these Q&A sessions where I answer anything that they can throw at me on deals that they're working on or questions that they have about stuff. And that probably takes up a few days of my month, like 2 or 3 days a month. And then that's it. I don't have any involvement in the sales, the marketing, the onboarding or anything. That's all, the team takes care of that and do a fantastic job. And everybody, raves about it. Often people put off joining for quite some time. And then when they do, their only regret is they didn't do it sooner. So, it works really, really well. And then obviously the day job is, pretty much relentlessly pitching companies to acquire them, take them public, do roll-ups, the normal stuff.
Okay, interesting. And I'm assuming you've had to kind of pivot how you're doing things due to COVID this year. What impacts has that had on your business? And are there any hot sectors that you're particularly interested in right now, based upon the impact that's had?
Yeah, so it's an interesting question. I think there's two aspects to it. One is business and one is lifestyle. The business side, we pivoted basically because probably 30% of our pipeline of acquisitions were at risk because of COVID. Not that they're going to die or anything. Most of the companies we deal with are 20 years old plus, so they've been through crisis before, they've been through recessions before. I know everyone always says this time it's different. Actually, there's a lot of similarities in every crisis. So so it's not that they'll fall off a cliff, it's just that they're less appetizing to bring on board at this time. So what we did is we kind of pivoted away from businesses that were more threatened by COVID and focused on businesses that had a lot more opportunity because of COVID. So the companies we acquired last year was a caravan and motorhome business, which obviously is a booming sector. We brought on board a company that reskills unemployed people to get jobs in health and social care, which again is obviously absolutely booming, and the government's throwing another announcement today, even more money going into that space through the apprenticeship scheme. We did a taxi company, which is basically electric vehicles, but they also disinfect the cars in between every use, and they can guarantee the drivers wearing a mask. So they're winning lots of corporate business away from the likes of Uber, where then it's not their own cars, it's not their own drivers, so they've got no guarantee of those sort of things. So there's a duty of care, obviously, for employers to make sure that people are as safe as possible, so we can help them conform to that. It's also a very acquisitive strategy, so they've already done their first couple of acquisitions, and many more to come. So yeah, we've been able to pivot and focus on businesses that had a good COVID or post-COVID story. So and also looking at a few IPOs in that sort of space as well, things that would be relatively COVID proof. And I mean, I think we kind of expected we expected 2020 to be the ESG year. That's how it was all framing up. And I'm doing some fairly exciting things in the ESG space that I can't talk about until they get approval from various regulators, but we were doing some exciting stuff in that space, and then obviously COVID came along, and that switched the entire narrative away from ESG and into, you know, the thing that's dominated the news basically for the last 12 months. So, but I think ESG is still, you know, everyone's talking about building back better, coming back, not just going back to the way it was after COVID, and perhaps focusing more on sustainability and environmentally conscious business and things like that. And so I think that will still be a big theme, but we just have to get this current, you know, shit out the way first, basically, before anyone can focus on anything else. So I think that was a big thing. And then lifestyle wise, I live in Singapore, or my primary residence is Singapore. And Singapore have done just the most fantastic job of keeping COVID out. It's COVID free. They had it earlier than most because of the proximity to China and the relationship with the Chinese community. So we had our lockdown back at the end of January, beginning of February. I think it was like April or something in the UK. And so we did the lockdown there. But actually, as soon as the lockdown was lifted, I chose to take my family out of Singapore purely because Singapore had a guaranteed, like a quarantine system. Right. So basically, when you come back into Singapore, you have to spend 2 weeks in a hotel, which is now being introduced in more and more places.
Yeah. Well, they still haven't introduced it in the UK yet, but they're in the process of doing that now. So just shows you the kind of bit of a time, you know, nearly a year later, Boris is getting his act together. But anyway, that's a different conversation.
I think gates and horses and bolting kind of spring to mind in there. It's kind of like a bit fucking late. But anyway, so we decided to relocate ourselves, and we're global citizens anyway. So my wife and I are quite nomadic in our living. We always spend about 7 months a year in Singapore, and the rest of the year, you know, all over the place. We have homes in Ukraine and in Spain and Dubai. So we decided at the time, Dubai was in a really severe lockdown at the time. Spain was in a lockdown. Ukraine, we have a lovely house and it wasn't locked down. So we decided to base ourselves in Ukraine from May. And we decided we were just going to try and live as normal a life as possible. So we carried on traveling throughout the pandemic. But the difference was we had to choose countries that were open. So we went for a month to Bodrum in Turkey, where we had some friends, and we spent some time down there, and that was very nice. So we went to Vienna and to Palma, to Mallorca, because we go to Mallorca every year anyway. And then I remember one time we were looking at where to go, and literally the only airspace that was open from Ukraine was Montenegro. Right. I've never been to Montenegro before, so literally we flew to Montenegro and we spent 2 weeks in one part and 2 weeks in the port of Montenegro. There, fantastic place, what a beautiful country. It's really I was really impressed with it. So so over the summer we basically did a month of Turkey, a month of Montenegro, and some other travel. And then as winter started to bite in Ukraine, we decided, and Dubai was open, we decided, like I think most of Europe by the looks of it, to go to Dubai. So I'm in Dubai right now, and we'll probably sit out the winter here before heading somewhere else. So we've managed to keep up the nomadic lifestyle, but business has pivoted a little bit.
Yeah, okay. And in terms of, for maybe entrepreneurs or business owners that are, you know, their kind of eyes are beginning to open to the kind of potential opportunity of acquisitions, what advice would you give somebody who's kind of considering, or maybe this is the first time they've heard about, you know, the fact that you can go and buy companies for no money down? What would your kind of starting steps be in that process if you were to start again now?
Yeah, look, I would start to educate yourself on the topic. It really is an eye-opener. It's a completely new area. Look, there's so many ways that you can use this as well. You can use this to grow your existing business. So you can use it to just simply add more revenue or different products or services, or expand geographically, or even just attract great people. You know, the great people you want to employ are often working in your competitors. So acquiring your competitors is a great way of getting them, because one of the qualities that makes them great is their loyalty. So they won't leave and come work for you, go and acquire them. So really, you know, acquisition to grow a business can be used in so many different ways. And then obviously the way that I created a lot of personal wealth and also a lot of personal freedom is in buying and selling companies. So buying them, restructuring them, and selling them on again. And that creates kind of 6 or 7 figure capital events. And it's those capital events that really, you know, transform your life. That ability to, you know, travel around and spend all that time with your family and away from, you know, one central place is really, it really comes out of, you know, doing deals and creating wealth outside of having everything tied up in one, you know, small private company. So I have loads of free resources. So if people go on to harbourclubevents.com, they can get a free report. We do a 21-day free email course where you can get an email every day with an update. I've written a book called Go Do Deals. So we actually have the URL godo.deals. Oh, there it is, yeah. So yeah, you're lucky to have a copy. Actually, they sold out. It was we made number 3. So we released in December. Everyone said don't release in December because you're up against every celebrity chef and ex-president and everything like that. Everyone publishes their book in December. But we'd actually announced that we were going to publish it December 2020 2 years ago, because we used to give just copies out to people who came to the Harbour Club.
Right.
And okay. So we'd had that date in the diary for 2 years, and it was only when it actually got close that our, you know, book marketing people said, "Oh, you shouldn't do it in December." And it's like, well, too fucking late. We've been telling everyone for 2 years it's going to be December 2020. I can't change it now. And we completely caught the publisher by surprise. The publisher was Morgan James in the US, and we were number 3 in the Wall Street Journal bestsellers list, and number 1
wow.
was Obama.
Wow. Okay.
Just before Christmas, just before Christmas, we made number 3, but that meant there was 0 books in circulation. So a lot of people in the UK were ordering them for Christmas, and as soon as they would print more, they would always prioritize the US booksellers first. So go to Barnes and Noble, they'd just keep supplying Barnes and Noble instead of sending them out to people that were ordering in the UK. So because they want to keep their retail buyers sweet, you know.
Yeah.
So we had there was a real constriction on availability. So yeah, you did well to get a copy. I believe it or not, I don't have a hardback copy yet. So I said to them, look, make sure you fulfill all the other orders first, and then send me a box full, you know, when you're done. So I've got the paperbacks, but not the hardback one.
Yeah.
So well done.
Well, no, it arrived a couple of weeks ago, but it's an interesting. I mean, it kind of covers some of what we've talked about today, but it gives a bit of an insight into the things that you were looking for at that time. And I guess I kind of asked this already, but you know, if we find ourselves in quite an interesting financial situation in terms of, you know, the governments have, you know, quantitative easing. They've printed a load of money once again. You know, I was watching a YouTube video this morning where they were talking about the potential for kind of it being a bit like the 1940s and, you know, kind of long-term interest rates, so CPI uplifts, which effectively, you know, could potentially erode real capital. How do you, you know, is there any sectors that you'd be looking at to kind of arbitrage that in any way? What's your thoughts on that?
Well, look, I mean, anything really, isn't it? I mean, almost owning anything is anti-inflationary. So, you know, the worst thing you can do is, you know, is sit on cash in this environment, because it's just eroding. So almost any asset is probably better. I mean, look, the great thing is you don't need money to buy businesses. So that's a separate issue. You know, the thing I always tell people is that you need to buy and sell businesses to create capital, and then deploy that capital into assets that generate you money. And this is a really big problem, because I've been doing this for 20 years. And so I've built my wealth over 20 years, but then people see me with the houses, the cars, and the private jet, and just assume they're the things that they need to spend their money. You know, rich people buy income; they don't buy things. They buy things when they've got enough income coming from their you know, passively deployed assets. They can then start to buy the things as well. And so it's kind of educating people that they've got to, you know, you've got to do it that way round. But everybody looks at, you know, they wouldn't have looked at me 20 years ago, but they'll look at me now, and then they'll try and base what they should be doing on what I'm doing now, not what I was doing 20 years ago. So it's that kind of I guess it's constantly reminding people that there are, you've got to do steps 1 and 2 before you do steps, 88 and 89. Otherwise you can create a massive mess. But it's really interesting. I often ask people the question, if I gave you $3 million, what would you do with it? Or if I gave you £3 million, what would you do with it? And the people that understand money always buy income, and the normal people, the civilians, if you like, and I would probably have fallen into this category for more than half of my life, would say, oh, I'm going to pay off my mortgage, or buy a nice house, buy a nice car, and put the rest in the bank, or put the rest into some sort of investment, So, but they always start with the things. They always start with the buy the house, buy the car, invest the rest, instead of invest it all and use the income that's generated from that investment to buy the house and buy the car. It's just that, that simple kind of pivot, that 1 degree shift in thinking for wealth creation.
I think you've obviously got lots of experience of the kind of downsides of these things, and clearly there are potential risks associated with, buying companies, and if you don't, a huge part of an acquisition, in my opinion, and I'm in the process of making one at the moment, and that will be my first, but in terms of that acquisition process, a huge part of that is the implementation of systems and processes so that you can make a business that's very scalable. So, I guess people perceive a risk of making an acquisition, but you've got some strategies and some tactics that can, A, reduce that risk, and B, also the processes that you're implementing into these companies will hopefully ensure that you get maximum returns on that. Is that fair to say?
I think it's about quantifying what the real risks are, because I think people see risk but can't articulate it. So they don't actually understand where the risk is or what the risk they're taking is, and so then they worry about it. And, worrying's like a rocking chair. It gives you something to do, but it won't get you anywhere. You need to, you need to understand what the risk you're taking. So what I encourage people to do is to remove the risks from the transaction, so that the transaction becomes asymmetric in terms of risk. Now, asymmetric risk is the old hedge fund kind of quant expression, which is where basically they put in place all the mechanisms to protect the downside, but leave the upside intact. And that's what we really do with a small business acquisition. So, for example, we'll create an SPV company, which is just a standalone limited company that we use for the transaction. So you wouldn't, if you have an existing company, you don't use that existing company, which would potentially create risk because you become a contracting party. So you can get sued and you can lose your existing company. So you use this, this empty SPV as the contracting party. And then, the biggest one is, of course, deployment of capital. If you're not deploying capital into the transaction, or borrowing money that you're guaranteeing and putting that into the transaction, then that also de-risks the transaction a huge amount. So we're always looking at how do we push the risk somewhere else, and make sure that our downside is pretty much our kind of time and effort that we put in. So effectively, all we stand to lose is our time, and perhaps you could classify that as opportunity risk, because you could have been doing something else. And then once you've covered all of that downside, well, then if it's successful, you make a load of money. If it's not, you're not. And then, in terms of that implementation of the systems and processes and stuff, that's important. But there should be a quick fix that adds a lot of value. And, we look at a number of financial engineering tactics on the Harbour Club, which give that kind of that quick fix that has a quick impact on the business. And, quite often it's very low hanging fruit, because no one running a business can ever stand back and look at it objectively. It's very easy to tell. It's very easy to tell what's wrong with somebody else's business. It's almost impossible to tell what's wrong with your business. So that objectivity, when you bring that into a deal, can quite often have quite a quick uptick. And the thing that I reinforce with the Harbour Clubbers as well is focus on the financial engineering and the things that you could take away. So what are the things that you could do to reduce costs? Don't focus on things like increasing sales or improving the marketing stuff. Treat those as like the icing on the cake. If you can increase the sales, or you can improve the efficiency of their marketing, fantastic. But if the deal is predicated on that, it probably won't happen quick enough to make it all stack up. So there's got to be a quicker win in there, something that's instantly controllable and doesn't rely on the vagaries of customers or other human beings in order for it to work. And that's kind of the key. So protect the downside and have a have a quick fix that you can inject into the business straight away that's going to have an improvement.
Yeah, okay. And in terms of the kind of generational side of things where we find ourselves, I've been doing lots of research on this and, followed some other courses as well, and there are other people that offer similar things that you do. And I've part of the kind of high level macro perspective is, baby boomer generation, potentially, frankly can't be fucked with another recession, too much like hard work. Maybe haven't digitized their companies.
Yep.
Potential opportunities from that side of things. Do you see that is a large opportunity right now?
Yeah, it's a tidal wave of opportunity. I mean, anyone that thought about selling their business in the next 3 to 5 years is pretty much ready to go now.
Right.
So you brought forward hundreds of thousands of businesses that were on the fence. And you brought them to a point of saying, okay, I'm ready. You're absolutely right. The baby boomers have seen this movie before. They know this is the start of the movie, and they don't like how it ends. So they'd much rather do something about it now and go relax, rather than have to go through the making redundancies, dealing with all of the shit that you have to do in a recession. It's the least fun. Every time, whether it was the European debt crisis, the dot-com collapse, the 2008 global financial crisis, the October 87 crash or whatever it was, the knock-on effect, normally hits small business for a good 2 to 3 year period. And so for 2 to 3 years, it's hard. You're scaling back, you're losing money, you're making people redundant. Making people redundant is the shitty end of the entrepreneurial stick. Nobody likes doing it. Everybody does it too late. That always has a negative impact on the business. That then means it takes even longer to recover from. And so, it's just making those hard choices. And especially, when you get to a recession, there's a massive proportion of businesses that just sit there and hope everything will go back to normal really quickly. And I think we saw that at the beginning of last year with everyone going, okay, well, particularly the businesses that were directly affected, like the hairdressers, the restaurants and all those people, instead of pivoting, so you saw restaurants opening dark kitchens and doing delivery services and things like that. And then you saw other restaurants saying, okay, I'll just wait until it all goes back to normal. And the ones that are waiting for it to go back to normal are all fucked. And the ones that pivoted and did something actually probably have something to rescue out the other side of it. So, but I've seen this every time, when we had the global financial crisis, which was the last really big one, we had the European debt crisis in the middle of that, and that didn't affect everyone. But the GFC, the 2008, 2009, that limped on for years afterwards with really slow growth, not much liquidity in the market, banks not lending, less cash in the system than there were invoices outstanding all around. It was kind of like somebody had stopped playing, there weren't enough chairs, but fortunately nobody stopped playing the music. So people only survived because banks weren't foreclosing and the government wasn't pulling the plug on people that owed loads of tax either. So it was only by virtue of the people that normally are the biggest petitioners for bankruptcy kind of took some time off. It was pretty much the only reason half the businesses survived through it.
Yeah. And I guess here in the UK, I was talking to a regional director from HSBC the other day about potential business acquisitions, and I was explaining some of the stuff that I was up to, and his view was very much that whilst things are ticking over at the moment, when the furlough scheme gets stopped, people have spent their C-bills and bounce back loans, if they've taken them, of course, then potentially that's when this really comes home to roost. So his view was kind of May onwards.
Yeah, the entire economy's on drugs, basically, isn't it? The patient is alive, but only because they've been pumped full of drugs. And after every drug binge, there's got to be a hangover. So it's it's in the post. The only thing I guess is that what they did with the global financial crisis is that they managed to keep that stimulus going for much longer. If you remember what happened, they took extraordinary measures to protect the economy and particularly to protect the housing market. And there's a very good argument that they actually probably should have let a few more banks go bust, and they probably should have let a few more house repossessions happen, because then we probably would have got that recession out of the way by 2009. And then 10, 11 and 12 would have been exponential growth, because the housing market would have had this meteoric rise back to where it is now. And, and the bank customers would have just gone somewhere else and banked with the more solvent bank. But instead, they pumped it all full of drugs, and we limped for 3 or 4 years. And it's always really hard because there are livelihoods and people involved at the end of those decisions. It's not as simple as saying, well, everyone should have lost their homes, because that's horrible. But yeah, there's always the sliding doors moment. What would have happened if they didn't get on the train? If they'd done it a different way, would it have been better? And a short rip the band-aid off, and then and then it would have been all over and much better after that. And are we seeing the same thing now, which is that they're going to keep drip feeding the economy with these drugs, and so that we have a few years of stagnation or stagflation before we can get back to proper growth?
Well, it certainly feels like it. I mean, they have repossessions have been frozen on certainly on residential property, and also on vehicles.
You can't sue anyone. You almost can't sue anyone at the moment. Debt recovery and it's all completely stopped. And another bellwether, which my wife told me the other day, that car sales in the UK are at their lowest level for 50 years. So that's quite a scary one, because obviously that's an indication of consumer confidence. That's interesting, because when they bought out the bounce back loans, I heard that most of the Lamborghini garages ran out of stock.
Yeah, that's true. So in terms of your plans going forwards, obviously you've built a fairly substantial base there. Is more of the same, and when's enough?
I'm just really enjoying it at the moment. I live a fantastic lifestyle with my family, and I get to stay home the whole time, so I spend a lot of time with my kids. We travel together a lot, and so from a lifestyle perspective, I have zero complaints. We have beautiful homes. We do wonderful things. So from that perspective, I have zero complaints. We've still got a lot to prove in the small business space. So we want our agglomerations to grow. We want to really get on the radar of the big institutions in terms of opening up small businesses a really viable asset class for them to invest in, because once we've done that, then that really opens the floodgates for global capital to flood into small businesses. And we're all about helping small businesses and making entrepreneurship pay again, make it a meritocratically rewarding activity for people to engage in. So we've still got a lot to prove there. So I've got another book coming this year called Democratizing Wealth, which is all about using entrepreneurship and this quirk in the economy, the fact that there's almost like a parallel economy. There's the one where everybody lives and works, and there's the economy where all the money is, and that we need to try and reconnect those if we want to solve the problems of inequality. So I'll be doing a lot around that launch in the summer this year. Might even come to the UK, who knows? But I haven't been for ages. So lots on really. But yeah, right now still plenty to prove, plenty to keep me hungry.
Yeah. Okay. And in terms of your kind of you mentioned earlier on that you kind of educated yourself and you've learnt a lot of these tactics yourself. How if somebody wanted to, is there any books that you'd recommend, or how do you take in your media? Do you watch YouTube videos, Audible? What's the kind of approach that you take in terms of digesting content?
Yeah, so look, I'm a business geek, and so I'm always looking for new stuff. I read a lot of books. Actually, I'm singularly disappointed by all the books on M&A. Because most of them are written by advisors, so they just tell you to surround yourself by advisors, or it's somebody selling a course and they're just trying to pitch you the course. And I tried to steer away from that in my own book and actually just give people content that was, they could go out and apply. Because I think, there's too much kind of fluff out there. But yeah, certainly, obviously I'd recommend reading my own books in terms of understanding that area of things. But then just be a business geek. I mean, I read about business all the time. I even read statutes and legal, when new laws come into place, when the Enterprise Act or the Finance Act or any of these things come into place. You can read the stodgy statute itself, or most law firms publish papers around new legislation that make it a lot more digestible. So you can go onto some of the major law firm websites and read their analysis of those changes and case laws and things like that. And a lot of the strategies that we come up with actually is from reading those kind of things. So some of the personal guarantee stuff has come from case law that I've read about, and or other Harbour Clubbers have read about and recommended to us. Yeah, we're always kind of learning and always adapting. And of course, you learn a lot from actually doing the deals. So, you know, my advice to everybody is to actually go out there, start engaging with business owners and start talking to people and find out where you get. I wouldn't bother looking for businesses for sale. I wouldn't go down the broker route. I would just start conversations with people that own businesses right now and see what their plans are for the future and see if any of those plans that you're able to, because you'll learn infinitely more from those conversations than you will from pretty much anything else. Even from doing my course, you know, doing my course will arm you with all the tools, but actually going out and doing it will really prepare you. I often describe it like breaking your virginity. You can read as many books about having sex as you want, but you need to go, you need to go and break your virginity if you really want to experience it. So,
yeah, no, interesting analogy. And in terms of your kind of personal life, do you have specific routines or structure the way that you work? Do you meditate? You know, you into yoga? What's the stuff that keeps you focused and keeps you motivated?
All that kind of stuff. So I have a really disrupted lifestyle because we move all the time. So what I tend to do is I tend to redraw my habits every time we relocate somewhere. So, for example, here in Dubai, they have very early school time. I guess because in the summer it's really hot in the afternoon, so they shift the school time forward. So although my kids are in a British curriculum, but they were in school in Singapore, they were in school in Ukraine, and they're in school here. So they're following a similar curriculum, but in different countries.
Yeah.
So here I get up at like 6 o'clock in the morning. I have the kids on the school bus by 6:40. Then I take the dog for a walk, and then I go for a run. And then when I get back, it's about 8 o'clock, and I do all of my email messages and all of that stuff to clear the desk. Yeah. So by 9 o'clock, I'm like clear, and I've had my first coffee, and I'm ready to go. And then I tend to do all my work in the morning. And typically with what I'm doing, it's not more than like an hour or two's kind of work. I normally call it a sort of power hour. Which is, you know, reading contracts for deals that we're involved in, or, you know, whatever it might be. And then the goal is normally then to head to the gym at about 11 o'clock. But I haven't done that. I haven't done that since we moved house. So I will restart that pretty soon. We moved house. It's just been chaos. So we bought a new place in the marina here. We were literally in the building opposite us, and we've just moved to the other side to a sort of villa on the front of the marina here. And since we moved in, we had like a few days where we were waiting for stuff to be delivered. We were, you know, crockery and glasses were arriving. Then we didn't have the gas connected. Then no internet. Then, you know, so I've had a couple of weeks off of kind of normal life. But yeah, normally we'd hit the gym, and then I have my breakfast about 12. So
you fast, basically fast every day then?
So I do intermittent fasting, yeah. So basically, I get all of the stuff out of the way, and I train fasted, and then I hit the hit breakfast at about 12, and then the afternoon, kids get back at 2:40. So afternoon is normally out somewhere with the kids. Recently, it's been fucking shopping for stuff for the house, so it's has been far too much of my time. But yeah, normally it's kind of running around doing all that kind of stuff in the afternoon, and of course the odd Zoom call and other bits and pieces. The good thing about the kids getting up really early is they go to bed pretty early, and then the evenings, you know, out for dinner, or not that often, maybe a couple of times a week, 3 times a week, and then otherwise just hanging out with the missus and enjoying ourselves. So yeah, pretty tame, pretty normal. We travel a lot. My wife is talking about going to the Maldives next week. I'm not sure if we've just unpacked. I don't really feel like packing again.
I'll tell you what, though, I'd love to go to the Maldives, and obviously we're not able to at the moment unless it's for business purposes. So yeah, if I was you, I'd be getting on that plane.
I'm very fortunate. It obviously is relatively close. We're kind of halfway. And of course we have our own plane, so it's fairly easy to do. But yeah, still just the thought of packing again and unpacking again and all that stuff isn't particularly appealing. I'd quite like to have like a few days uninterrupted just to enjoy the new home and get some stuff done. But we'll see.
Very good. And is there any other tips that you'd give people to, enable them to focus and to work harder? Is there any other ideas that you've come across or come up with?
Yeah, look, I think most people are kind of prone to procrastination and trying to think of things that they need to do before they're going to take action. And I see this a lot with delegates who come through my program, that they do the education piece and then they feel like they're not quite ready yet. There's maybe that 1% more that they need before they can start. But that's kind of in your head. That's your fear holding you back. And I love this expression that you really need to start before you're ready. And I think most entrepreneurs, the reason they start any business is because there's a little bit of naive bravado in there. They don't know how hard it's going to be, so they do it. But obviously, as you get older, you realise how hard it's going to be, so you don't do it. And that's a big one to overcome. And we've embarked on some bonkers projects, like trying to list an ETF, which we're doing at the moment. Doing listing a SPAC, listing a REIT. Issuing a bond. So we issued a bond last year, like a regulated bond. All of those kind of things, they're really daunting and they're quite expensive and they're time consuming and you have to learn a lot to do them. But you can piss around thinking about doing it, or you can just get on and do it. And, sure, there's going to be some bumps in the road, and I would say anything you do in the world of entrepreneurship, or anything you do, expect traffic. There's going to be some issues, and you just have to get on with it and go through it and come out the other side. And so the biggest differentiator I think I see between people who are successful and people who are perhaps less successful is literally taking action. It's literally doing something. Some of the smartest people I know are never that successful because they're so smart, they know how fucking hard it's going to be, so they don't take action and then they don't make any progress. Whereas a little bit of dumb naivety can actually be a good thing, because you just bowl in there thinking you can do it, and then you find out what it's like when you're there. And that means once you're there, you might as well, what is it they say, if you're going through hell, keep going. So basically, when it gets hard, you've got no choice, you've got to keep going. So I would say that you've got to be action orientated. You've got to do stuff. I've always been very impulsive. I've always made decisions. You can repent at leisure. Just move forwards and do things. And I think that's really important. And your environment is really important. Put yourself in a positive environment. I love Singapore, because Singapore is just a can-do place. It's an example of almost the manifestation of the impossible. It was a little island that didn't even have any water, had to import water, and it's now got one of the largest sovereign wealth funds in the world, incredible economy, zero crime almost, it's just an incredible place. And Dubai has a bit of that about it as well. It's that 30 years ago, it was a pile of dust, and it's now this incredible city and economy and lifestyle and everything else. They've literally made the impossible possible, and that's what entrepreneurship is all about, making the impossible possible. And so sometimes I find the environment that you're in can really affect the way you think. I mean, the media and stuff in the UK and the US is super depressing. It doesn't help you. It doesn't help you move forwards. In fact, the first place I moved abroad properly, I lived in Italy for a little bit, but the first proper residency I got after the UK was Mallorca in Spain. Right. And I always used to joke, the best thing about living there was that I didn't understand the news. Newspaper headlines, news on TV, had no fucking idea what they were saying. And honestly, that sorted that was probably 90% of the problems in my life sorted, because I wasn't ambushed by all this negativity all the time. Yeah. And the other aspect was my diary emptied. All of a sudden, I wasn't having, when I was in the UK, I was leaving really early to go to a meeting in London, then another meeting after that, another meeting after that, another meeting after that. Then you meet someone for drinks, then you come home, then you go to sleep, then you go and do it all again. I moved to Mallorca, suddenly my diary's empty, and I made loads more money. I did loads more deals. It was like I was busy for busy's sake. And as soon as I cleared all of that stuff out, it just got better. I'll tell you what, sorry, I'm babbling on now, but we're kind of almost at the risk of doing that with Zoom meetings now. Yeah. Because that I'll just meet you for a quick coffee thing that we piled our diary full of. We're now full of these Zoom meetings that when you get on them, you realise, fuck, we didn't need to have this meeting at all. What are we doing? You know, like, why are we even here? Because you just said, okay, yeah, let's hop on a Zoom and discuss it. Okay, let's hop on a Zoom and discuss it. Okay, let's hop on, and you've done that so many times. In the end, you kind of, yeah, you're just having these relentless meetings and not really focused, action-orientated meetings.
But at the same time, because everybody is at home, I've personally found that it does make people more accessible as well, because you know that they're at home. So
yeah, but really weirdly, I mean, we obviously deal with a lot of stuff in capital markets, so taking companies public, dealing with financial businesses and stuff like that, and you know where they are, but they're moving even fucking slower than normal. So I don't know what's going on. It's like they've got nothing else to do apart from read our agreement and sign it and send it back, and yet it takes infinitely longer. I think everyone's just fucking drunk. It's like they're in lockdown, so they're hitting the wine fridge
at lunchtime or for breakfast. Yeah,
exactly. Getting earlier and earlier every day.
I'm sure there's an element of that going on. Cool. Well, look, it's been a really interesting insight into some of the things that you've got going on. Is there a kind of takeaway that you'd give somebody that now they've got a bit of an insight into the world that you've built? Is there one takeaway that you'd have? And secondly, do you have a kind of clearly defined plan in terms of how you're creating that future? I very much refer to what you've done, and I'm trying to incorporate some of this into my own life as lifestyle by design. Is that something that you've intentionally structured your life that way? And do you have a vision board, or how do you focus?
Yeah, so look, I am deliberately lifestyle driven, and I think I took that on board from the 4-hour work week a long time ago, where I read that kind of lifestyle by design idea, and I think that really resonated with me. And and it was around the time I was selling companies, and that was why I thought, okay, how do I do entrepreneurship but wherever I want it to be? And moved to Mallorca and built, went lifestyle first. And I always thought I could probably make more money if I stayed in London and just did everything from there and really got my head down. But then where's the fun in that? I get to live in all these wonderful, glamorous places and enjoy myself and spend all this time with my family. It's a much better kind of way to do it. I'm very old-fashioned in terms of goals. I use notebooks, so I've got the big blue one and the little yellow one, it's literally big plans distilled down into little plans distilled down into kind of next actions, and then what I'm focusing on right now. So I've got like a few things that I need to get done right now. When they're done, then I'll focus on the next tier of things that need to get done, and the idea is to get them done by the end of this year. And I'm sure I'll get half of it done by the end of this year, and half of it I won't. And but getting half of it done is 10 times more than I perhaps would achieve if I didn't have a plan. So it's great and coherent in January when you look at it, and you can laugh at it in September, October when you look back at all those things that you thought were important in January.
Haven't made any progress on them. So that's quite a structured approach. Quite a structured approach that you take then in terms of breaking it down into different sections. That's interesting. Okay, cool. Well, I really appreciate your time, and I know you're really busy. So thank you for coming on. Just finally, if you've got any closing remarks, and also where we can find you on social media and all that good stuff, that'd be really helpful. But thank you for your time, Jeremy. I appreciate it.
Yeah, no, look, thanks for inviting me along. It's been really, good fun just to chat about some different stuff other than Power Rangers and Paw Patrol, which is the current topic of conversation downstairs. Look, if people, if you want to, I've got a URL, www.godo.deals. If you go to godo.deals, you can order a copy of the book that you've got, and it comes with that 21-day free email course, so you can follow along and learn the basics, basically, so get an understanding, is this something you want to pursue or it's not for you? I think that's a pretty good way for people to find out. Social media, we have the Harbour Club YouTube channel. There's loads of content on there. LinkedIn is Jeremy Harbour. Instagram is harbour.jeremy, which is a bit more sort of lifestyle-y. And Twitter is Jeremy J. Harbour, if you use any of those kind of platforms. I'm also on Clubhouse from time to time. If anyone's using that, look me up on there. Look forward to chatting deals with anyone that wants to talk about my favourite topic, really.
Yeah, good. Well, congratulations on the success so far, and I'll continue to keep my BDI on what's going on, as you continue to grow the organisation as you have. But yeah, thanks for coming on, Jeremy. I appreciate your time.
Fantastic. Thank you. Take care.
Thanks for listening to The Growth Show with Matt Lindsay. Please like our podcast and subscribe today.